Hello and welcome to our weekly market update. This is Ahura and we'll be with you with the review of the previous week, and then we're gonna have the week ahead market outlook. We're gonna check together what's happening in the market, what's happened, and what we should expect for the week ahead. Looking at the current market situation, I have to say that right now two things are moving the market. One is the geopolitical tensions, as with what we had in recent weeks. Another one is AI-related stocks with the profit taking that sent the stocks lower on Friday last week, helped the Dow Jones to gain weekly, while the Nasdaq and S&P 500 they had a weekly lose, but turning towards the AI related stocks to most fundamental stocks, just like strong stocks that we had before, big industrial stocks that we had longer time in the market, showing that the market is moving slightly from the risky asset to more uh, kind of, we can say, stocks that they proved themselves to more proved and secure stocks, but still they keep the money in the stock market, which means that you're looking again for the opportunities to moving back to the market. At the same time, we know that this week the Nasdaq will open. The Nasdaq will have SpaceX in its list starting from July 11, if I don't mistake, from this week or the week ahead. Uh, Anyhow, the stocks which closed last week lower slightly based on this changes, but at the same time, we know that market had a slightly lower risk because of the ongoing negotiations between Iranian and Americans. However, during the weekend, with the geopolitical tensions that happened between Iranian and between Israel at the same time, on one hand, between Israel and Lebanon, which they agreed on on the ceasefire, which can end in this way, that the Israel will leave totally the land of Lebanon step by step, while the Israelis will give part by part the land to the Israelis National Guard, not to Hezbollah. And Americans also guaranteed that they're gonna just like take the guns and the weapons from the Hezbollah, and they can just like uh, somehow they are the guarantee of the ceasefire, the guarantor of the ceasefire. That made the Hezbollah is under pressure, and on the other hand, that sending a message to Iranian that Lebanon is not your territory and it's a independent country, and we can take care of ourselves, and we can negotiate for ourselves. That put a little bit more pressure on the hardliner inside the Islamic Republic based in Iran, and hardliner of the Hezbollah to go and make create some issues in on the ceasefire between Iranian and American. The attack to the two vessels in Strait of Hormuz, which was moving by Singaporean flag. That brought just like back attack from just like it's ended with the attack from Americans to Iranian some radars and some military military asset is at Iran, and then Iranian the attack to Jordan and Kuwait. Anyhow, these tensions during the weekend increased these tensions, and that's why we can see S&P weeks S&P 500 weeks again above the 19, showing us that the market risk again is high right now. So this situation telling us that the world, just like that, because however, again, both sides, they agreed that the ceasefire still continues, and we are not going to increase the level of the tensions. That's why the stock market, especially the US futures, had a positive reaction. Again, Dow Jones gained by 0.2%, S&P 500 and the Nasdaq, they are up by 0.4%. In Asian stocks, on the other hand, we had a very mixed reaction to the situation. While Nikkei and Kospi, they are under pressure because of the profit taking from the AI and tech related companies, around both of them losing around 1% so far. Hang Seng in Hong Kong by 1.8% gain is leading the market, while FTSE 50 in China is a little bit on the forward with 2.6% gain so far. Today in Australia, also the market ASX 200 is up by 0.4%. In India, Nifty 50 had a not good situation at the beginning of the market. Nifty was one of the worst markets indices so far, and today also is losing again negative. Not good situation these days, but generally it's not a bad asset to invest for a long term. That's what's happening here in the markets. But on the commodity market, if we look, we can see that oil price again increasing after these tensions. I mentioned that last week. Even we have the Strait of Hormuz open and come back to this normal and condition that we had before the war, still we have much more demand in the market compared with the the demand in the market is more than the supply. That's why we can expect to see the higher prices, and the prices after emotional reaction of falling so much. I do expect for WTI and Brent oil to prices to get back between 75 and $80. Right now, WTI is trading all and this like 69 almost. It is like in the border of $70, while the Brent oil trading above $73. That can tell us that between 75 and $80 price for WTI and the Brent oil is something that we can see in the next days. The gold again is under pressure, trading at $4,000.65. $4,065, silver around $58. They are still better than the previous week, but generally still, in the short term, they are under pressure, but in the long term, the good level, they can be the good levels to reinvest again. Just the silver is down to this level from above $100, while the gold it was just like around $4,800 just a few months ago. The situation is positive for them. On the other hand, the natural gas is increasing rapidly. $3.30 is telling us that the gas is facing more demand in the market. Looking at the economic calendar, just the last week started with the Chinese central bank meeting. PBOC hold the rates at 3 and 3.5% for 1 and 5 years loan prime rate. In Canada, inflation slightly increased to 1% for headline, and core inflation slightly increased to 2.2%. Then we had on Tuesday, we had BOG core CPI increasing, slightly losing the momentum to 2.7%, but still much higher than the BOG target. On the other hand, S&P global surveys for the service and manufacturing sectors, PMI numbers, generally we can say we had a slightly better to compare with the previous one, better numbers in most economies, but even somehow it was less than expected, but generally the numbers were fine. In United Kingdom, numbers were missing the expectation in previous months. Still putting again the UK economy under pressure. In United States, on the other hand, both service and manufacturing activities increased in June. On those numbers, they were primary numbers. Week ahead, we'll have the final numbers. On Wednesday started last week with the Thai central bank holding the rates at 1%, telling us that the Thai economy is still moving fine, not bad. In Germany, the current accounts slightly increased, just like better situation, but still under pressure. And then in United States, we had the housing market data. New home sales fell by 7.3% in May, telling us that these higher rates still putting the pressure on this housing market in United States. So we can still see the pressure in the housing market in United States. Then we had on Thursday, we had labor market data in Australia. Unemployment rate fell to 4.4% from previous 4.5%, telling us that the situation on labor market is fine and supporting the previous RBA previous meeting decision of holding the rates at 3.75%. I think that's the situation is fine. We just shouldn't be just like they shouldn't be so hurried to make a new decision. Then the last week's most important number, it was the US core PC price index and PC price index. And we saw that the core PC price index increased slightly from 3.3% to 3.4% annually, monthly increase by 0.3%, headline PC price index by 0.4% monthly growth, increased to 4.1% from previous 3.8%, telling us that inflation is high, sticky, and central bank can take these numbers more under consideration, because in the Fed, the Kevin Warsh Fed, we understood that the current numbers, they will be much more important than expectation for the next months, as central bank. He says that we shouldn't count on not the data that didn't come yet, and we should count on the real number data that we have, real numbers that we have in the market. So that's why the situation looks like changing from the reaction to the data to the harder and more reaction to the current data. Initial claims showed that 215,000 for new claims, and continuing claims also 1,821,000. Both of them, they are very good numbers, telling that the U.S. Inflation is still, U.S. labor market is still good, and we can still rely, still reliable and resilience labor market we have. In Brazil, unemployment rate eased slightly to 5.6%, backing the Brazilian Central Bank BCB's decision. In the last 3 months, BCB cut the rates by 25 basis points in each meeting. That can tell us that, okay, that this, while the inflation also is under 4%, this cutting just like this 25 basis point rates cut didn't impact the inflation, didn't impact the labor market as well. And we have the labor market and unemployment rate lower at 5.6%, supporting the decision that we had. And then this we're gonna have this week, which is mostly about inflation numbers, PMI inflation numbers in the Eurozone and European economies, PMI numbers, and also U.S. Federal Reserve, U.S. NFP numbers. However, we will have the central banks meetings during the week in Europe, and we're gonna have this week so much very important speeches. Just like starting from the Lagarde speech for later today, then BOE speakers, then we will have the Fed speakers, especially the Kevin Warsh speech on Wednesday will be very, very, very important to watch. However, during the week, we're gonna have the PMI numbers. Generally, from the PMI numbers during the week from different economies, especially from the China, I do expect a little bit better numbers. In United Kingdom, I don't expect again the positive numbers there. In European economies, flat, not good, not bad. Inflation in Germany should stay around 2.5, 2.6%, not surprise expected. Then on Wednesday, as mentioned, we're gonna have speech Fed Chair Warsh speech. But at the same time, we're going to have the European inflation numbers. We expect the European inflation to slightly ease to 3% from previous 3.2% for headline, and core inflation supposed to stay unchanged at 2.6%. Generally, shows that the European inflation also is still sticky. And unemployment rate in Russia on Wednesday can tell us around 2.2, 2.3%, while the retail sales can increase this month for the May around between 4 and 5%, not like above 6% as we saw in for the June, not around between 4 and 5%, not like 6.5% that we saw in May. And finally, on Friday, we're gonna have the U.S. labor market data, NFP numbers. We're expecting around 115,000 newly created job, with unemployment rate unchanged at 4.3% with 0.3% average earnings growth. Monthly, annually, we expect to see around 3.45, 3.6%. At the same time, I should mention that the NFP this week will be published on Thursday, because Friday is U.S. Independent Day and holiday. That's why the Friday's numbers will be published this week on Thursday. Generally, for the U.S. labor market, I do expect the positive numbers, and the inflation data that we had, it means that can be positive for the U.S. dollar and negative for the stock markets. On Friday, we're gonna have the lower liquidity market, but inflation in Turkey should be watched, and inflation of PMI numbers in more economies will be out. Generally, about the PMIs, I'm not negative, but they're not positive as well. But about other data I already talked about. Looking at the chart can tell us if, let me share my chart with you. If you look at the chart and the situation that we have in a chart, we can start, as always, check the charts with you can check the charts with the VIX chart. I mean, markets with the VIX chart. We know that the VIX showing the market risk, and the risk around 18.85, 19, telling us that despite lower risk in the market compared with the previous week, but still the risk is high, and that higher risk holding the US dollar still on the stronger position about 101, which putting some pressure on the gold price so far today, and we can see the price around 4,400 $4,040, sorry, around this. But generally, I'm positive about the gold price. I mean, for the gold and silver, I am not a negative. I'm positive. In the stock market, S&P, Dow Jones, and Nasdaq, all of them, they had a positive reaction so far today. But generally, for the week ahead, with the positive labor market data that I do expect with the higher inflation that we had last week, I can say that the US stock market can be natural with the lower tendency this week. That's what we are do expect. About the oil price, I already talked about the oil price, mentioned about the prices, and my expectation is to increase the prices between $75 and $80 for this week. And for the gas, which is higher still, above $3.20, I do expect to see the gas price also around $3.20, $3.10, and $3.20 so far for this week. In the cryptocurrency market, Bitcoin is still negative, under 60,000 USD. I don't see any positive news and data that can change the market condition and situation. Still, the Bitcoin price can be under pressure, unless if it can increase above 66,000 US dollar. Otherwise, it will be under pressure. About the currency market, US JPY still should be watched more carefully. JPY around 161, 162 against US dollar, telling us that the BOG should start intervention in the market, and we can probably see some positive action for the Japanese yen. That's the general market situation and our expectation. Hope it was useful for you. Talk to you again as soon as I can. Have a good time. Bye bye.